Hi everyone, we are back Forex trading video analytics. Today is the 3rd of May and we're back on one of our bearish positions with the euro. This is the euro versus the Australian dollar. We actually have a few bearish positions on the euro. This particular one is relatively new, a few days old, and I just want to remind you what we're looking at from the bigger picture. You can switch to the monthly chart and you can see this really impressive trading range that you can track back all the way to 2013. Somewhere in the middle of 2013 began the first leg, and then of course came the second, third, and just now I think we have completed the fourth leg. Now every single leg here is a major trend, right? And so if we will have here a full-fledged downside reversal, we can expect a long time of this pair going downwards, possibly all the way to back to the lower part, right? Starting with a level of 142.80. But that's, like I said, that's the big picture. If we go, if we narrow this down a little bit and go to the daily chart, we also find something quite interesting. First, instead of focusing on that very ambitious level that we saw from the monthly chart, 142.80, we're taking the more closer key level, right, the 53.51, and use that as our main price target, and that still leaves us with a very healthy potential move, right, all the way to 53.50. We're talking about 600 pips still, and we are already about 100 pip in profit. Now, the whole proposition here started when price was finishing moving upwards to the well deep into the upper part of the setup, and then began to turn around. The first downside segment was not enough to determine whether we're going to have here a downside reversal, but the following upside movement was actually giving some serious indications to that. Take a look how this upside movement, right, this very recent upside movement reached exactly, right, precisely the level of 160.92. That is the blue dotted line that you can see right here. And you can also see this really nice reaction to that level on these three spikes there, right? Three attempts to break through, all of which failed, and price began to turn around. Now this blue line happens to be a 76.4 last level of correction with regard to the previous downside move, right? So that actually suggests that we just had a local upside correction and we're back on what may be the beginning of a new downside trend. So we'll see how it looks, we'll see how it goes. In the meantime, I think we can safely push the stop loss level from its initial placement, 162, all the way to the very tip of the previous high. You know what, probably even lower than that, to 61.50. So that's what we're going to do. We're going to adjust stop loss level by 50 pip and still stay above that 76.4 Fibonacci key level right there that determined the edge of this upside correction. Now we'll see how we go from this point on, but in the meantime, I can wish you good luck, and we'll see you in the next video. Bye bye.